And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good afternoon, friends and traders. Welcome to the Market Recap. I am Dan Hodgman. It is Wednesday, October 13th. And I don't know about you guys, but are you as tired as I am trading these markets today? God, they were choppy. They were tough. It was up. It was down. It was all over the place, left to right. Hopefully, we were all able to grind out a little bit of something here today, or you recognize, hey, it was a little bit too choppy for me. I'm going to stay away from this one. We had really one trade opportunity, in my opinion, in the Crude oil. Crude oil opened up this morning, and we went and checked yesterday's swing low, held there for a minute, had another chance, we popped, we broke right back down to it once again, and we held down there for about a total of an hour, give or take, right around that 79.50 mark, and we rallied right back up, closed the gap to settlement price. Boom, that was it. The day was done for the most part in crude oil right around 10 o'clock this morning. S&P 500 this morning opens up, breaks down to settlement price, rallies right to overnight highs, break back down, blows through overnight lows, rallies right back to settlement price, struggles to get through, finally breaks out of settlement price. I don't know about you, but I really saw an opportunity this morning when we kind of rallied back towards settlement price. Seemed that we were holding up. We were struggling to hold up near settlement price because an opportunity possibly for a short. I ended up taking that short, got stopped out, and that market went right back up, made new highs on the day, and we're ending up a little bit higher. Nasdaq, now this is the one that really probably drained all of us trading Nasdaq today. We had points of control played out. We had defined point of control for today, really came in the first hour. That was where the play was. Every time the market came near today's point of control and broke back down, that was about it. We finally got a good chance this afternoon. Really, for me, this is where it kind of fixed my day for me. Right around, I want to say it was, let me see here, just so I can give you actual time. Right around 11:30 Central Time, that market broke down to 14,700. 14,700 for me was the opportunity. That market gave me a chance. I was able to kind of scrape back my day after catching that long there and running it right near today's opening high. That was my biggest opportunity today, but truthfully, that was a choppy market across the board. Hopefully, you guys had some luck finding some good entry points there. It really did not seem to hold any specific levels all over the place. Crude or gold this morning, though, a little different. Opens up this morning, and off the open, we break right down to settlement price. Market check settlement. And I'm looking at this, and we're all probably thinking the same thing. I'm hesitant. I want to wait for equities to open. So that market bounces off a settlement price, rips $35 higher, and then stops. We got nothing from then on. So that market was, in my opinion, pretty much done right around 10 o'clock this morning and fell into a trend sideways. Euro was really the only directional market we had all day. Euro opens up this morning just like gold, breaks down, fails to make it to settlement price, starts to recover, maintaining directional trade from the overnight session, makes a new high. Really, that was our chance. We saw that market continuously making new highs, giving us really good opportunities for pullback, trends higher, once again, pulls right back, makes another little bit of a entry point, right? We're looking for those weaknesses to get in on the move. So that was a good opportunity there. And lastly, 10-year note. All over the board. We break down on CPI this morning. We rally to new highs. We break back down. Missed settlement price 1, 2, 3, 4 times today by about one tick. Ending the day just slightly higher. So it was a tough one. There's no doubt about that. I won't deny it when I have an exhausting struggle of a day. Fortunately, I'm walking away pretty much scratch. I think I got a couple bucks in the green. Hopefully you guys did better than I did. Some days it's there and some days it's not, but I try and be as honest with how my trading's going as humanly possible. I've been at this for a long time, and so we still all have our ups and downs. They're exhausting. This is a tough job. It's a matter of sticking to that plan, managing that risk, grinding away with it, and keep working at it. Hopefully you can end with some green. And fortunately, I was able to come out a little bit green here today, but not the best, not the worst day. Frederica, good to see you. And Charles, Tanya, Spencer, Nick, Dan, I feel you. I didn't complete the combine, but I lived to trade. All right, good, Nick. It's all it's about, right? Live to trade another day. Just because you have that option to click reset if you gave something up, that's not the mentality we want to take. Trust me, I've gone through the combine before. I've traded with those rules. I know as you have a kind of a tough day, gets close to that loss limit, it's easy to say, hey, why not? I got $50. I'll trade a one lot in the Nasdaq and see if I can make a couple bucks back, and I'll chip it away. Well, we all know how that works. It doesn't work out the way we want it to. Stop, close that platform out, come back tomorrow, come back the next week. Slow it down. Take your time. Keep working through it. And we've all got to do those things. Charles, gold was quiet all week today, and I went to the moon. I missed it all. Charles, you know what? Don't feel too bad. That move comes off of CPI. We have, in theory, worse number than expected. Granted, it was by 0.1%. Breaks down and rallies. Makes the whole move by 9:30 this morning. Really tough to catch that if you're waiting that equity open, that market really starts to take off. Then you start looking for those pullbacks. You look for the pullback because you don't want to get in on highs as the market continues to mark new highs. You wait for the pullback. We don't get that pullback, and it just stops. Justin, Nat Gas added again. Yeah, I didn't even look at Nat Gas today. Let me pull that up really quick. Got to be cautious with that natural gas right now with the ranges we're seeing on it. Here we go. Natural gas up a little bit. Okay. PD, I did the stupid move of trading in the afternoon, and when I know it was slow, should have walked away 140 instead, down 350. Lesson learned, PD, right? You're holding yourself accountable right here. You're having that humility to say what I should have done. Write it down. Get a sticky note. Get something to put up on your screen. Set an alert on your phone. If you can set that alert that says that goes off every day when you're supposed to be done, stick to that word. Stick to that plan. Hold yourself accountable. Check in on that every day. Really, those are the keys. That's one of the hardest things to do, right? When we recognize, hey, I know this section's not a good time for me. I have no problem admitting I can't trade that pre-market, right? I don't like to trade 7:30 to 8:30. I have to stay away from that. I can do overnight stuff. That's fine. It's at 7:30 to 9:30. It doesn't work for me. I want to stay away from that. Even if there's a number coming out, the only time I'll get active in that is if I'm having to hedge a different position, strictly because of volatile number. But really set yourself that plan, hold yourself accountable. We can check in too. We can talk about it anytime. All right, way to go, Justin. Up $2,000. Charles, now I will trade for micros for the rest of the week and feel drained. Yeah, it's only Wednesday, but yesterday was a tough trade day. Yeah, we got ranges defined, but that was a tough day. Today was a very difficult trade as well. It's an exhausting week. Oil was far from the big mover today after the move. We had a rip higher. Gold was the big mover for us here today. The term is insanity over and over again. We just continue to learn, PD. Copper was racing at the start of the year when it was near all-time highs. Oil and copper reached new highs this year when will gold and silver? Well, there's a lot more geopolitical stuff reason behind why gold is struggling, right? So I would recommend, I'm not going to give my own opinions on it because that's all it is. It's strictly an opinion, but do a little digging into why gold is struggling, right? We have some fear out there. We're seeing inflation rise. Why isn't gold following? There's some questions around that. Dig into it a little bit. I think you'll you'll get an understanding. I think it's all opinion-based, reasons behind it, but I've kind of justified it a little bit to myself. So take a look at it. PD, yeah, have a good one. Tony, good to see you. Living on the profit target time is tricky since early morning here is later approaching lunch there. All right. Pacific time. Gotcha. Living in the Pacific time is tricky. Yeah, it's tough. You got to be up earlier. It's a whole different world. The time zones, it's difficult, right? We're fortunate sitting here in the Midwest, because Chicago kind of the hub of all of this stuff. So we get fortunate in the times. Jimmy, I feel the same way about the pre-markets. I've cut out trading in the pre-market, and I've noticed it's helped a lot in my opinion. Awesome. It's those little things. It's when you start to recognize those trends in yourself. There's a lot more to tracking and trading other than what's my P&L, right? We can have the best day. I talked to a buddy of mine yesterday. Forgot he had a tool out on. It happens to everyone. I get it. He went into his platform kind of at the end of the day before the close, make sure everything's cleared. Instinct is before we get to the close, you just go in and click exit, cancel all, and he looks at it and he goes, why is my P&L upticking? And he had an accidental tool out on and made a couple grand, not even knowing it. And that's a major lesson learned. Yeah, he was fortunate to make money. Could have gone the other direction, could have hurt him. And it's huge lesson. Now he's recognizing, hey, I need to check that button more often throughout the day. If I'm getting up to go to the bathroom, going to make a sandwich, I got to step outside of the office for a little bit. Go click that button, get away from it. Or make sure if you are you've got stops, OCOs or auto OCOs set in place so that if you do get one triggered, it closes everything out. You can lock in profits. Making sure you got those risk controls set in place, really a beneficial thing to do. I used to have it on my screen. I used to keep, I use the actual sticky notes that come with like PC. I love them. You can just search in the little search bar in the PC thing, sticky notes, and I use those pretty regularly, and I got lists of them, and they're all sitting there of like all these little checklists. Pilots have their little checklist. If you've ever seen it, they've got their checklist, and they go through everything, and it's laminated. Step 1, step 2, step 3. I like to keep those just up on the screen. I keep them in their own little section. Nothing covers them, and I watch them all day. No, Anthony, we're getting to the charts. Just a lot of questions been coming up. I do appreciate these questions, so keep them coming. Why don't we go ahead and take a look at these charts really quick? And if you got questions, continue to drop them in here. I'm in no rush here today, so we'll go from there. Let's open up our charts here and see what we got going on here today. As always, start with crude oil. Crude oil settlement price here today, $80.64. $80.64 right here. And this to me was the opportunity. Market opens up this morning. We break down. And you know me, I'm always looking at prior swing lows, prior swing highs. Those are areas I like to look for an opportunity. Market breaks right down to the tick. A few ticks through yesterday's swing low. Great opportunity. Now when I look at this, I've got two choices. We have a huge gap down below, and we also have an unchecked point of control right down here at 79.30. I'm liking this opportunity. I like being long here. I like this idea. This market has struggled. If we want to go ahead and look for an opportunity, we can buy the low from yesterday. We take this low. We can keep our stops relatively tight. I'm probably going to bring it right down towards below that unchecked point of control. I'll bring my stop just below that. And I'm going to see if I can catch the run. If I take the loss, that's okay. That's absolutely okay. I can look for another opportunity. But this sets up really nicely at a prior low, and we have a beautiful target up above of yesterday's point of control right here at 62. Remember, settlement price a little bit higher, up at 64. So we got two great targets up above. We take the long from down below. We see if we can get to run this up. That was the trade. We had one trade, in my opinion, here. You could have done a little bit here. You could have caught the run this morning up by yesterday's value area high, maybe caught the sell up there if it holds long enough. Not always going to hold the longest. See if you can get it to rotate over. But to me, this was really the move from low to high. Shut it down, lock it in. Like we said, that's a nice $1.20 move for us to lock in some really good profits per contract. So that's, $1,200 per contract on a perfect asymmetric trade. You can keep your risk extremely tight and take that run to the upside. Next, let's look at the S&P 500. S&P 500 settlement price for the majority of this morning held below settles, down at 43.4075, 43.40 3/4 was settlement price. So this is what we got this morning. Market opens up. quick check of yesterday's value high. We check it, we break, and we rotate inside. Now we start to come down towards settlement price. This is where I'm going to start to look for something. As this market starts to approach settlement price, this is where I'm watching momentum. I'm watching order flow. Does this market move right through, or does it hold up? And it breaks down fast, and it breaks down hard. Market starts to rebound. Now we can start to look for a chance. This is where we get to start to look for an opportunity. As this market starts to rebound, we want to look for a little bit of a pullback to see if we can get this market to accept inside value. Now, if we're missing this move here, we've got another chance a little bit later in the day. This is where I was telling you, market came up by settlement price. Settlement was rejecting it for about a half an hour. Really liked the opportunity. I looked at this. I said, here's a short opportunity for me to see if I can get this thing to rotate back inside. It does not. I get stopped out. Got a little money in profit. Looking for a bigger move. It comes back up. I get stopped out. I find another pullback, and I say, look, it's starting to show acceptance up above settlement price. Let's see if we can take it and move this market the other way. This is where we catch that bid. Market rotates higher, pushes point of control higher on the day, and this is going to resolve to the upside here today, and we're going to settle just a little bit higher. Now, Nasdaq, this one was quite choppy here today. I've got the wrong time frame chart. I have been looking at the 15-minute a little bit just for some personal testing of stuff I'm doing. This market opens up, and here we go. We rallied yesterday's swing high to the frickin' tick. Great chance here. Really is. We come, we check it. Oh, what is that? We also have a point of control up above. Boom, market rotates inside. This market rotates inside, but we have settlement price all the way down at 653 quarter. 653 quarter. And the market fails to make it all day down to settlement price. And we start to grind. And for the majority of today, while we sat here all day up until the last hour, here's where we saw this market continuously rejecting. We had a point of control, and this point of control was set pretty darn early in the day here. If we just set the first hour, point of control up at here at 18, as we continue to move with it, it moves up to 20. So point of control relatively set here all day, and the market continuously rejected for quite a while and rotates lower. Finally, this market starts to bounce. And this is where I'm paying attention. This is where I told you my day got made. Market came right down to 700. I'm watching 700 struggle. I'm watching it struggle to break through. We tried once. We come back down to it. We continue to try again. And this to me was my opportunity of the day. Catch the long, and I'm going to see if I can go check high side. Market continues higher, catches a quick pop, making a new high, and that's where I was fortunate enough to get out of the trade. So I was able to make a nice move here on the day. Towards the afternoon, typically this is where I'm looking to be done for the day. So I was able to close that trade out, lock it out, and be done with my trading for the day. Next, let's go ahead and look at the gold market. And like we said, hell of a move off the open. Market rotates lower down to settlement price. Settlement price in this market, $1,759.30. $59.30. And here's what I love. Comes right down to our moving average. Moving average and settlement price right here. Breaks down. Quickly snaps to. And this is going to be a tough trade, right? We're picking a bottom. But if you start to watch how that market's reacting, when this market came down towards settlement price on the open, this is where you can start to recognize, hey, it's failing to break. Let's see if we can get that reversal. Support or settlement does exactly what we talk about all the time. Settlement price is going to be one of two things. It's going to either be a springboard and do exactly this, or it's going to be an accelerant and it's going to send this market lower. Well, it was a springboard here nicely today. Rallies right back up. We've got questionable CPI numbers, concern coming into the equity open. Equities break on the open, continuing the reason for this directional up move here. Let's fix our profile there. Continuing with the downside move, and finally this market falls into chop, like we said, right around 9:30, 10 o'clock this morning. All right, next, let's go ahead and look at the euro. Euro, only directional market we got here today. Market opens up just like gold. Breaks down off the open, comes and checks yesterday's point of control, and to me, yeah, it falls 2 ticks short. This is a checked point of control in my opinion. Market comes down, checks yesterday's point of control, fails to make it down to settlement price down at 115.43 half, 115.43 half, fails to make it down there. Market recovers, starts to rally, and here we go. Now we're starting to find some opportunity. We come and check, uncheck point of control. Here you got two options as we check this unchecked point of control. We can look and say, hey, let's see if we can rotate this thing inside, or we're looking to see, hey, this is just weakness in an uptrend, and it picks a great valid point for weakness. So we recognize weakness in an uptrend. We're going to go with momentum. We get the buy down below, and that was the great trade for here today. Next, let's go ahead and look at the 10-year note, which was just all over the place here today. 10-year note opens up this morning, huge break with a huge rally. CPI, those huge economic numbers are really a big factor when it comes to Treasury trading, especially something like this. It's not just a futures industry, but a lot of the participants in this are major options, institutional options, retail trading spreads. They're not strictly just trading the future. So this market, we have a lot of volume comes in here every single day. Probably the largest futures product traded. Market breaks down, comes right down to last week's swing low, bounces, huge move. And as soon as we start to recognize it's struggling and it's going to rotate back inside. I don't have much to say about this one. It's not levels based. This is all fundamental based off of news we had here today. All right, guys. Those are markets we got here today. I see some other comments coming in here. Yes, Justin, you are spot on. Got to be intentional with everything you're doing when it comes to trading, and stops have to always be set. Anthony, we showed the charts. I get paranoid. I press flat and everything like every 30 minutes. You're not the only one. I do it a lot. I've had some phantom orders that I thought I canceled that would get filled in the overnight, and I just I'm like, why isn't? Because I used to manually input my positions into my P&L stuff, and I'm like, why aren't things matching up? And I do it in 3 different places. So I've got my computer running it, my positions. I have a digital position that I fill out, and then I also have a manually handwritten, and I've got 2 of them matching, but my computer's telling me something different. I'm confused, and I'm scrolling through. I'm trying to figure out what the hell happened. I had an order get filled, an auto OCO clicks in. I get stopped out, or I don't remember exactly what it was, and I'm confused, and I'm scratching my head. I'm like, man, I totally missed that. What the hell? And so I realized, hey, I must have left a phantom order out there, close everything out. Now I click that exit, cancel all, flatten position about 1,000 times a day. So we've all been there. Learning to let your winners run is harder than it sounds. Ain't that the truth? Justin, letting your winners run, there's a lot of dialogue out there around it. There's a lot of conversation. There's a lot of opinions. Everyone's got their own thoughts on a lot of this stuff. I look at it as it's tough. If I'm trading 1s and 2s, I'm taking my whole position off whenever I get near where I believe my invalidation is or my profit target is. I'm closing them out. I'm not going to let that type of thing run. It's when I get a little bigger is when I'm willing to take, let's just say I don't run positions much bigger than 4s and 6s. Those are rare numbers for me. But let's say I got a 3 lot on or a 4 lot on. I'll peel off 50% of it, maybe 75% of it, and let the last one just kind of go if the market's getting directional. But yeah, it's letting your winners run is tough. Then, you can get into this idea of trailing stops. You got to be cautious with that. I think a lot of people, platforms you can set an automatic trailing stop loss. I'm not a fan of that because that's just price and time based. If I'm trailing a stop, I'm doing it as the market establishes a new shelf or a new channel or something of that nature. I'm waiting for that market to establish. I'll let it pull back, rally back up again. You look at, let's just say you're long Euro here today, and we get that little pullback this morning around 10 o'clock. As you see that pullback, let's say you're long from the lows and you want to let that winner run. You're not trailing your stop, because had you done that, you would have lost out on a good move. So you wait for that market to establish that new low, go make a new high. Once it starts to make that new high, then you can bring your stop just below that new low. And that's how I trail my stop. So just my own opinion here, getting off on a tangent. George, good to see you. Norman, what do you look for when you enter a trade around certain levels? Do you use price action setups or just execute the trade when it is at that level? Norman, it's a little bit of both. I have opinions around the levels. Every market's a little bit different, right? You got Nasdaq. We've talked about this idea of elasticity. Nasdaq's in a very elastic market. It's one of those rubber bands that come with the mail carrier, and they're big and extremely stretchy. I'm going to watch more price action when I'm trading a market like that. S&P 500, I'm going to be more executional right at those levels. So every market's a little bit different. Every day is going to be a little bit different. I am watching pretty closely. It's very rare that I just put in some orders up and down the ladder and hope that they fill. I'm manually doing pretty much most every trade I do. PB&J, the settlement price. Settlement price is, there's a calculation around it for the most part. It is near the last price traded during regular pit hours that all P&Ls in the market is based off of at the end of the day. You can find settlement price in quote boards. You can find it on the CME's website. It's the first level every trader out there should be looking at when they sit down. Where is settlement price and where is the market in relation to that? Settlement price. Reason I find settlement price so important is the retail world is a smaller world, right? Guys that are day trading, getting in and out throughout the day, and not carrying positions overnight. The bigger, institutional guys, the bigger movers, the guys holding the bigger positions, the bigger traders out there, they're carrying positions overnight, and they base their P&L off of prior day's settle. So let's say you carry a position today at I was a bonds trader, 30-year options trader, and we ran settlement price. We carried large positions. We ran settlement price. Settlement price posts or market pit closes at 2 p.m. Market closes, and we used to wait until CME posts preliminary settlement price right around 2:15. We get that settlement price at 2:15. We input that into our P&L and risk programs. We're able to run our P&Ls based off of all of our trades that we made that day and our positions that we're still in. And our P&L for where we stand right now is based off that prior settlement if we don't do anything. So a lot of times market looks to rotate towards settlement price. Maybe these are long positions that are trying to get back in the money because the market is below settlement price. Maybe it's short positions and the market's up above and they're trying to rotate it back inside to get back towards the money. So that's why I find settlement so important. Nick, you like the auto break even function a lot. If it works for you, great. I struggle with it. I'd rather do it a little bit more manually. And Norman, no problem. All right, guys, let's see here. We're running long here. Real quick, we'll just touch on what we got going on. Bitcoin catches a bid today here at $57,575. Let's go ahead and look at our stocks and hustle on out of here. Airbnb is up just slightly here today, pretty much scratch for the most part. $173.58. You got GameStop. Good bid here today, up 4.6%, up at $184.06. AMC, up day there as well. It's $37.91. You got Tesla holding happy up above $811.08. Robinhood, where's Robinhood? Here we go. Down 0.025% on the day, $40.52. And lastly, VIX. No surprise here. We had a spike this morning on the break, but the VIX has given up a little bit, 1856 to end the day. Sweet, really quick. It is Wednesday, so let's take a look at tomorrow's economic releases, jobless claims, and PPI, 7:30 a.m. Central Time. The big one you got to keep in mind. I know a lot of you guys are crude traders. Crude was not today. Remember, Monday is considered a U.S. holiday, so that pushes crude number to Thursday. So crude will be tomorrow at 10 a.m. Central Time, and right before that at 9:30 a.m. Central Time will be EIA natural gas, and then we're on our way towards the weekend. All right, and lastly, this date in history, and I'll send you guys on home. First and foremost, on this day in 1792, the White House cornerstone was laid by President John Adams. I actually have a couple here for us today, I think. I thought I did. Yes. If any of you guys are in the Navy out there, happy birthday. You guys are almost a full month older than us Marines. But it is the birthday of the United States Navy. On this day, October 13th, 1775, Continental Congress authorized the first ever naval force. So happy birthday to all the sailors out there. And I can guarantee you your birthday is not going to be as fun as us Marines will be next month. So on that note, guys, I'm going to go ahead and sign on out. John will be back tomorrow morning, 7:45 a.m. Central Time. Yes, 7:45 a.m. Central Time with the market forecast. Remember, we have moved that up a little bit earlier so that everyone gets time to make it to the equity open. So go give John a good heckle. And other than that, I'm going to sign on out. Have a great rest of your day. Look forward to another fun-filled day tomorrow. So like I said, John will be back tomorrow morning, 7:40 a.m. Central Time. So until then, stay safe, wash your hands, trade smart, trade well. Look forward to seeing you guys in the markets. Take care, everybody.